we were talking about the pound earlier. You're talking about obviously the pound against the euro and the US dollar. So I want to touch a little bit more on that. Central banks obviously going to continue to still drive the FX market as we head into 2017. The pound first and the Bank of England, what's your thoughts in terms of policy and where you see the pound going?
Well, obviously, the last big move from the Bank of England was in August when they cut interest rates. For years, we've been expecting them to raise interest rates after the financial crisis. They, in fact, cut them. I think they were probably a bit hasty there. And the UK economy data shows it's been pretty resilient since the Brexit vote. But obviously there are risks when Article 50 actually gets triggered and negotiations actually start. How do businesses react to that? Do they start hiring less people? We've started to see a bit of evidence of that going into the fourth quarter. There were less jobs hired in the last 3 months as we're talking now in December. So I think from a Bank of England standpoint, the economy's done okay. They suspect it's going to tip off a bit. There's also a risk that prices rise a lot because of the rise in the British pound. So they're kind of caught between a rock and a hard place. Yeah. Probably they're just going to stay pat on interest rates. So the big move of the pound is probably not going to be what the Bank of England does. If they stay and do nothing for the first half, it's going to be the political uncertainty or lack thereof.
Indeed. What about the traders' favourite, the euro dollar? What are going to be the major driving forces for the euro dollar? I know obviously we've got kind of political uncertainty still in the US, as we've just been discussing with Trump, and of course in Europe as well, and even in terms of what the ECB are actually going to do.
Yeah, I think the political uncertainty is definitely playing into the fact that just at the end of the year here, we've seen euro dollar drop below 105 and dropped to its lowest since 2003. So that's a big significant move in the euro. I think part of it definitely is the politics. We've got these French and German elections. Investors, I think, literally are pricing in some risk, even if it's small, of a Eurozone breakup. Obviously, that's not our base case scenario that the Eurozone breaks apart, but it's increasingly possible if some of these populist parties get in. You know, Marine Le Pen, one of her policies is to offer a referendum for France to leave the EU should she get in. So that proposes to again be something maybe interesting for 2018.
Indeed, yeah. Well, Britain's paved the way, so to speak.
Exactly. So we're the first and the only at the moment. Maybe France will be after us. Again, it's unlikely, but you've got to kind of price in the risk in the market. From the ECB perspective, they've recently announced that they're going to be extending their asset purchases through to the end of the year. So you've got that central bank support throughout the year for the economy. It's a problem for the euro. It's downward pressure for the euro because they're still printing money. Compare it to some of the other central banks, obviously the Fed. It's relatively quite a loose economic policy, and that's a headwind for the euro.
What about the Bank of Japan? We've just been speaking about obviously central bank intervention and support. What about for the Japanese yen then, and perhaps in terms of what the Bank of Japan is going to be up to in 2017?
Well, the Bank of Japan's been a bit of a leader in terms of shifting the policy a bit. There was a big game-changing moment at the start of 2016 when Bank of Japan cut interest rates to negative. The idea of that would have been to weaken the yen. The result was that the yen actually soared. So they got the completely opposite result that they wanted. More recently, they've realized that they kind of started to run out of tools a little bit in terms of monetary policy, so they're not going to focus so much on asset purchases. They're focusing on shifting the yield curve. So basically trying to keep long-term interest rates high, but shorter-term interest rates low, just so you can borrow cheap in the short term, but banks who rely on that difference can still make some money and help the economy generally function with that difference between those long and short-term rates. So that's their focus. It's been working so far. There was a bit of a credibility problem from the start of the year. They've overcome that seemingly at the moment, but I think a lot of it's been helped by the ECB and by the Fed policy. The ECB basically tapered at their last meeting. So while it's still accommodative, it's not as aggressively obvious as the Bank of Japan. So all that put together just talks to a lot of yen weakness. The only trouble is we've seen dollar yen absolutely soar into the end of the year. And so positioning wise, this is a difficult time to go long the dollar yen because it's already gone up so much.
Speaking of credibility, I mean, if we look back, the Fed and obviously Janet Yellen, there was a little bit of a credibility issue earlier in the year because people were expecting so much in terms of hiking rates, and they didn't actually see them until, as we've just had this week. How many interest rate hikes do you think we could see in 2017?
That's right. I mean, you're right to point this out because it's a bit of a deja vu moment at the moment because the Fed at this time last year were forecasting 4 rate hikes. Yeah. As you know, we've just got a little Christmas present at the end of 1 rate hike. And so now they've actually got a slightly more modest forecast of just 3 rate hikes next year based on their latest forecast from the December meeting. So the risk is, again, that those 3 just suddenly turn into what? None. Yeah, that's the risk. Again, we like to talk about Trump. It's the Trump factor again here, because if the Donald can deliver on his stimulus package, that is inflationary. That means that monetary policy is not as important as fiscal policy because the government is stepping in through the fiscal side. That would mean there probably would be more rate hikes. So actually 3 may be undershooting it. It could end up being 4 or 5 or 6 if the economy gets that boost via the Donald.